Good afternoon. Welcome to a weekly tax update for January 7th, 2022. This is in fact our inaugural program, so welcome. My name is John Shuey, and if you've been to my programs before, you really don't need to read this brief bio. If you have been here, well, you're a glutton for punishment that you've come back. So thank you again for taking the time to join us for this hour as we look at things that are new and exciting in the last week of tax. So today's first topic is efile. The paper processing still is. So avoid paper if you can. File on time as you must, but if you can avoid paper filing, you should. So that opened up at 9 a.m. today. I was able to download otherwise suspended acts from December. So efile is up and running. We have individual efile. There is no word yet. I did go on to the... Thank you, Nicole. Yes, I did forget to click recording. Thank you. So we did go back to the website today. You can see the status page there. It does say no date set yet for individual e-files. So by all means, please go. You can update that page. Otherwise, we're going to update you as soon as we know. I will probably send an email out to you. Interesting comment from Henry. 1041s can technically be e-filed right now, but there isn't a final 1040 form yet. Also very interesting. We're seeing that in, I didn't put this in the program today, but for example, Form 940 isn't final yet, and it's due this month. So people are all in a panic. And my only comment there is, well, you can pay the 940 tax. I've paid all my clients 940 payments that were due for the year this month. As soon as the form populates, we'll send it. You know, it's not the end of the world. And I'm sure all your clients are going to look and see that their 940 completed form is in that packet of stuff they don't look at anyway. So speaking of the COVID updates, most recent information available. This was all gathered, I put this stuff together yesterday and today. So this is the most recent information available. I am giving you the IRS date that they say is available. December 31st, numbers as of December 31st, 2021, there are 6 million unprocessed individual tax returns sitting at the various IRS centers. This includes those in error correction. You'll recall error correction are things as simple as the rebate recovery credit is wrong, or the I have a child that someone else claimed and needs to be removed from the return. All these are in error correction. Right now, 90 to 120 days from December 23rd to process any of those returns that are hitting that pile. All error-free returns that were received by the IRS prior to April of 2021 are processed. I will let that sink in. So everything from April forward of last year may or may not be processed at this point. So IRS is saying if we have an acknowledgement for an e-filed return from 2020, take no further action. They have it. Don't worry about it. Now, to be honest with you, we had 3 different taxpayers that came out of the woodwork. Where's my refund from last year? I don't know. Give me a power of attorney. So we're making phone calls. And in some cases, errors were made on the part of the practitioner. In a couple of cases, the refund was just sitting there. And, oh, well, since you're on the phone, let me release it. And just shake your head that it's that easy for someone at PPS to release a refund. One thing I didn't put in the slide that I'm now remembering is that from January 3rd to January 22nd, no refunds can be released by the IRS. No money is coming out. Different systems are offline. They can't online, offline. So they told us they can't process returns or at least process refunds. So anything there is not going to generate until January 23rd or January 23rd, whatever that Monday is. So very interesting with that problem. If you paper filed a return, you should check where's my refund. And if it tells you that they're working on it, that means they do indeed have the return. If it's been a while, you check it and they indicate there's nothing on file, probably time to call. As of January 1st, 2022, 2.3 million unprocessed Forms 1040X. There's no breakdown there of paper or e-file. I want to think that a lot of those are e-file because, as you know, 2019 and 2020, most returns can be electronically filed. Most amended returns can be electronically filed, provided, of course, that the original return was electronically filed and there isn't a change in filing status. So it's suggesting that, in another year, almost everything that goes out will be, in fact, an electronically filed amended return. And the only response they're giving us as to how long will it take to get these things processed, instead of the usual up to 16 weeks, they're now saying more than 20 weeks. So 5 months, 5 to 6 months. Things we sent in April, we did see them on the transcripts come December. A couple of folks are still waiting on refunds, even though we can see them in the system. Obviously, this 3-week delay in January might be the culprit, right? The refund is approved but not released. So it is very, what's the word I want? Not difficult, but depressing. I don't know, that here we are, we're still doing 2020 return and it's the 2022 tax year, right? Terrible stuff. Unemployment refunds. There is not an available number outstanding. I did submit a FOIA request. We'll see if we get an answer to that. The IRS is saying they processed 11.8 million returns automatically to release the refund. A bunch that we saw, the IRS was still wrong. They missed using the capital gains worksheet. It appears that they simply took the amount of refund times the tax bracket and mailed a check. Not the most elegant way to do it. I do suggest that everybody coming in that you first ask, you should have gotten an adjustment last year. Did you? If they did, hey, how much was it? Go back and look at transcripts. And it's a way to separate yourself from TurboTax is to do that math. Maybe if someone in the office, an intern or someone, enter the data, make sure they got the right refund. We had somebody that was off by $18 because of the capital gain worksheet. I wrote a letter. It took 4 months. He got more interest. He calls me up and says, why did they send me $18? I told him why. What's interesting is I put that in as a SAMS complaint, that systematic error, that if you're seeing more than one. I did get an email from the IRS that they wanted to discuss it. And then by the time I spoke to someone, they were in fact aware of the issue and quote unquote working on it. But that doesn't help folks that didn't get the right amount of money. And I'm seeing in the comments here that folks are seeing the same thing. What's unfair to me is the 50% of people who prepare their own tax return or of a ghost preparer, I guess, that no one's looking at this. They just took the check or direct deposit. That's even worse. The old days, they got a check and they thought it was wrong. They would hold the check, bring it in with the notice. They don't even have a choice now, right? The money is deposited in the account. The IRS says they are, as of December, they are now looking at more complex 2020 returns. So holy cow, we still don't have all of that done. We'd have been better off e-filing amended returns. I think they would have gotten it processed much faster than what they're trying to do. 941s, I don't know about you, I have a gazillion 941s with ERC outstanding. Some of them are 6 or more months right now. As of January 5th, 2022, the 941 units, Cincinnati and Ogden, are opening their mail on time. Okay, good for them. They have 2 million unprocessed Forms 941. Now, that's interesting that in December, because that must mean third quarter and prior, there's no fourth quarter forms filed. My only thought is that our software didn't do an elegant job or, in fact, let you override the correct ERC amounts. So we ended up paper filing second and third quarter 2021 941s with ERC claims. That people have been getting their money. I mean, it's 6 month, 5-6 month process. They're getting the money. So I wonder how much of those 2 million are ERC related. The IRS website, the update website for these operations issues does say that they have people trained for ERC issues, and that's who should be reviewing the returns. I will tell you, we had a client with a $61,000 ERC that generated a refund on an original filed second quarter return, and the IRS applied it to the third quarter. Didn't send them a check. And I didn't even have to explain that one when I called in. The phone rep at PPS said, he's never going to have that much credit. I said, thank you. They mailed him the check, fortunately. The 941X inventory stands at 446,000 returns. Also, just an incomprehensible number. Incomprehensible. So yeah, so 19, 20, and 21 e-file are what's open right now, right? So if you have a fiscal year starting in 19 or 20, of course you can file those returns, right? The e-file year or the paper form year is based on the year the fiscal year begins. So anybody with a 20-21 fiscal entity, you can go ahead and file that return if your year is over. ITINs, processed in the order received. As of December 28th, they are processing those from mid-October with no amount of backlog available here. I do know we can't get them on the phone right now. We have a large number of ITINs that were went in with returns. The returns aren't processed. We have a couple of returns that were processed where they only processed the taxpayer's ITIN. They didn't process the dependent's ITINs, despite everything being attached. So we're fighting that battle now. Of course, we can't get our friends at the ITIN unit on the phone. Typically, it's been busy. You don't even get into the queue. Got into the queue the other day, and it was a 2-hour wait. And of course, you get kicked off the phone before you get to those 2 hours. The digital signature on paper forms, if you recall, this came up August of 2020. The IRS, in what I think is actually a good thinking outside the box, said we've got to get returns signed. People can't get out of their homes. People are trapped overseas. We're going to have to take some digital signatures on returns that were otherwise paper filed. So in this case, they've now extended this to October 31st, 2023. So that's not only this filing season, that's next year's filing season and all the way through the extension, the normal extension deadline. I do think the oversight here is they should have gone to December 15th, 2023, as the most affected by some of this COVID stuff are those overseas, the ability to get documents back and forth to and from them. So they should be given this extension through the December 15th due date. But I digress. We have time to argue with the government about that. So included on this long list are it says Form 8453 series. That's the old e-file form that we had to mail into the IRS 15 years ago. I don't know. In that, though, Form 8878 series, Form 8879 series. So those forms may be electronically signed outside of the shared secret stuff. So personally, with all of the rules regarding knowing your signatory, making sure that it's not fraud, those special rules for remote transactions, for our folks that can actually sign using a two-factor is the wrong word, right? But the shared secret where they're going to the database and asking the security questions, we're still doing that. We have folks, though, overseas. We have U.S. folks on ITINs that don't have deep U.S. credit reports, that doesn't work for them. We're using Adobe Sign to EchoSign to get the signatures. It's not a great idea, and but we're allowed to do it, so we are doing it when we can. Yeah, Jeff is saying KBA, correct, the KBA. All right, in my mailbox, January 3rd, my late birthday gift was this letter. It said important tax information enclosed. Now, thank goodness, because my clients, anything that says important tax information enclosed, they don't open it, but they put it in that folder, and I get it at tax time with all their other unopened mail, right? Must be for me. It says important tax information document enclosed. So in the notes, Rebecca is asking, what is acceptable digital signature? Well, in theory, the IRS gives you a list, right? Typing their name, signing it with a third-party authenticator. If you email me, I will send you that link. I guess I should have put that link in here. But the IRS, there's a whole notice that lists about 50 different paper forms, some of which you've never heard of. It also says this is what's acceptable, right? So, and it's very generous in what they're allowing. So Adobe Sign will work, DocuSign will work, any of those things will work without the knowledge-based authentication. But again, if you can get someone to do the KBA signature, I would do that, because certainly 3 years from now, if I have an audit and they're looking at my signed 8879s, I really don't want to have this argument where we go back and get the notice. My CRM only used one knowledge question, such as the birth date. So the issue here is it can't be a shared secret that you know or you assign. Knowledge-based authentication for signature normally of the 8879, you can find this in IRS publication 1345, is it's supposed to be shared secrets obtained from a public database. So typically that means a soft inquiry into their credit bureau report, and then out pops the questions which you can use in the KBA. So back to this, right? So these came in the mail. This is the form 6419. The form 6419, which shows how much our clients received in advanced child tax credit payments. Now, something that's been going around for a while. I've been advocating since the summer, and now I notice everybody, including the IRS, is copying me. No one gives me my due and says, John said this first, but I did say it first. You want to get transcripts. So here is a transcript for a joint individual. This is now, and for those of you that don't know, this is an account transcript at the IRS for a practitioner is available first day of the year. The 2022 transcripts are populating. They don't have anything on them, but they're out. So if you look at the 2021, you can see that in July, this person received $250 of advanced child tax credit, right? That's that July 15th, $250 payment. Sadly, Mark mentioned this the other day, that the IRS they only have 1,000 possible transaction codes to work from. So they did not create a separate transaction code for the advanced child tax credit in general, or even each month in particular, right? They're just not out there. So we happen to know that that's what this is, credit to your account refund issue. That's the child tax credit. So the question became, what would these letters show? This is a joint IRS account transcript. Was a letter going to be sent to each taxpayer, right? The 1998 Taxpayer Bill of Rights 2, plus some other laws, say that you have to notify the taxpayer and the spouse each separately about a joint account. That's why you see 2 copies of every notice about collection that goes out. You see 2 copies of the installment agreement notice. This is why. So what was going to show up on those notices? Were those letters going to have $250 for each person? Potentially then we double. Is it going to show $125 for each? I don't know. Well, we do know. So here are 2 letters. So this same person here, right here, generously provided me with copies of the letter for themselves and their spouse. And if you look here, you can see one of them is numbered 58 on the left. The other control number is 57 on the right. So they really are 2 separate people. And if you haven't seen these letters yet, the letters will come out and they will list total number of payments and total number of people you claimed on the return, qualifying children. So in this case, we can see that this married couple, they filed jointly last year. The joint credit was $250. On the letters that they have now received, they each say $125. So good and bad here. If I am filing you married filing separately or head of household separately from the spouse, I don't have to do any math. The letter shows me what you got, what you were credited. The downside is I really need both letters unless I have a transcript. Now you're saying to me, but John, why do I need both letters? I can multiply by 2. The problem here is that every spouse didn't necessarily get half the amount. In many cases, a spouse said, oh, we don't need this advance credit. They logged in, they did everything. Typically, this is the money spouse, right? Who handles the taxes, handles the checkbook. Money spouse goes in and does ID.me, sits there, smiles, shows their ID, and gets the credit shut off. Money spouse did not read the part that says, oh, if you're married, your spouse needs to opt out as well. So we have situations where one spouse received it for 6 months, the other received it for 1. We have situations where one spouse received it for 1, shut it off. The other spouse got the second payment, then they shut it off. So sadly, my opinion, we need both letters. Comment. So Rose, I heard that there is a #800 number for questions on the advanced child tax credit payments, 800-908-4184. The taxpayer can call They'll get the amount on this number if they don't have a letter or cannot access their account. That might be true, assuming, of course, that they can authenticate themselves, and further assuming that they can get through on that number. So since Rose brought that up, I should make Rose dial the number right from home and put it on speaker. Let's see. You all bear with me a minute. 1-800. I hope Rose didn't make this up, but it's not the psychic hotline.
Welcome to the Internal Revenue Service. To continue in English, press 1. If you are calling with a question about the expanded child tax credit, including advance payments of the child tax credit, you can also visit www.irs.gov for the latest information. Your call may be monitored or recorded for quality purposes. Please hold while your call is transferred.
Oh, that's interesting. I was hoping we were going to get the, we're too busy in your subject, call back tomorrow note, right? That everyone's calling in the notices. And Wendy is correct now that I look. That is the number that is on the notices. Henry wants to have clients sign an affirmation. They understand if they give bad information, their refund may be delayed. Maybe a 2023 event. You know what, Henry? We found out last year, people, even the most honest people, make a mistake. People lie. But my greatest fear is that, 5% of people didn't get that October payment. So even the person who comes in and says, 3 kids, $300, tells you they got, $900. You do the math. That's right. 300 times 3. That's what they should have gotten. But they missed the one payment and forgot to tell you. It's still going to delay the return. I want to see transcripts. And bear with me for a minute. So before we do a return this year, we're requiring the IRS account transcript that I can pull, IRS letter 1444C, which is the one they got during the year for their $1,400 refund, or the letter 6475. 6475 is another letter that they're going to get this January, telling them how much of the $1,400 payment they received last year. Letter 6419 is the letter we've just been discussing. As of January 7th, 2022, I had poor Nicole go and do this with her account because Mark is away, so I can't get his children to do anything when he's away. The Advanced Child Tax Credit Portal shows total payments received by the taxpayer. So there was speculation, when would we be able to see the 2021 account transcripts? Because unlike the professional transcripts, the individual transcripts are not live during the year. Well, we tested today, 2021 is live. We were able to see both in Get My Transcript and Tell Me More About My Child Tax Credit Payment. We could see the exact amount that was received. So the tools are working if we send the taxpayers to the website, if they don't want to pay us to do it. It takes a week to get processed. It takes forever right now to get transcripts processed. Transcripts are, it takes a month to get more than 3 weeks, about a month to get your 8821 or 2848 posted to the THS or posted to the CAF. So we've been trying to get all of these things now and get them uploaded now. Probably half our clients, we have them already transmitted and we can see transcripts, but we're trying to get this done earlier the better. I don't want to be on the phone calling the IRS. Yeah, can you upload that 2021 transcript for me? I really don't want to. So as far as contacting clients, Fred, that's super strange that they only have them done in a week. No clue how that's going on. Good for you, but no clue. Anyway, so client contact. We texted and emailed all our clients when we saw that letter come out January 3rd as to watch for it. And we got both positive and negative responses. The good responses were, thank you. You know what? We send birthday texts. I get thank yous from people for a birthday text. We got back confirmations. Oh, I have it. I'll bring it in. I didn't need to know that, but thank you for interacting with me on the text. And then very positive. My friend is confused about these things. She's looking for someone for help. Can I send them in? Yes, you can. Bad results. I got texts that I didn't get one. And my reply is, well, you have grandchildren who don't live with you. You haven't had kids in your house in a long time. You shouldn't get the letter. So my bad, maybe if you're not explaining it better. And positive and negative, we have folks popping in and dropping them off, uploading them, calling me. I don't know that I needed that. They're adults, they could hold on to it. But people are engaging, and I guess any opportunity to engage with your clients, it shows that you care, and it shows that, I don't know, they still feel they can contact you. Standard mileage rates were announced, and I'm just going to put this out here so in case you need it. Cents per mile, medical, charitable. I want to remind you about basis reduction. So basis reduction is when I use the standard mileage rate, I am reducing the basis in my car. This wasn't so important prior to the Tax Cut and Job Act because many people traded in their car. And yes, it was still important to track your basis, but most folks were deferring the basis into new vehicles. Well, the problem now is that even if I trade in a vehicle, as you all should know now for 3 years out, is if I trade in a vehicle, I still have to report that as a disposition, as a sale of the traded in vehicle, the disposed vehicle. You have to remember, whatever your business miles you use, you have to reduce them by 26 cents a mile. In some cases, you'll find your high mileage drivers have a basis of 0 in their vehicle. So that's important. Notice 2022-03 talks about that. So if you want to see it, you can Google that and take a look. I debated putting this in because I don't normally do much with tax-exempt entities. I find that either this stuff is so screwed up or they can't afford to pay market rates for the work they need to get done. So I tend to shy away from them. But the Form 1024 is the application for other than a charity that wants exempt statuses other than a public charity. So this is now an online form. You process it online, you pay for it at pay.gov. Once fully rolled out, it's supposed to decrease the amount of time it's going to take to get the exemption letter out. So right now, there's a 90-day reprieve from January 3rd, 2022. I guess anything that needs to go in, you have those 90 days. After that, it's going to be completely and only paperless. The user fee for the application remains at $600. Anyone I need help in getting clients to even report their upgraded their vehicle ID is welcome. Or Richard, I'm thinking they have business vehicles, so typically you're finding out or they're telling you. All right, so the Build Back Better plan is going nowhere as of right now. Manchin is saying that he's not currently negotiating it, but in another quote, he said the clean energy credit negotiations that they are working on might be a starting point for getting back to the Build Back Better plan. New York Senator Schumer in the Senate said that they're on a path forward for discussions to pick back up. That sounds so political. In other words, they're nowhere. They're on the path. We're on our way to being able to talk about getting back to talking about the bill. Very, very roundabout. But he did say that he's going to bring it to a vote and he believes that it will pass. But as we all know from the I'm Just a Bill video, you need both the Senate and Congress to pass a House of Representatives to both pass the same bill and then the president to sign it. So Chuck getting it through isn't quite going to be enough. Now, this is something I had not realized. I read it in one of the obscure publications that we review, and I said, oh man, so this either needs more information next week from me, or maybe it'll evolve into a class and I'll let you know. So research and development changes. So some Tax Cut and Job Act changes went into effect January 1st, 2022, right now. So there is a less generous calculation for R&D costs. In the past, deductions were typically allowed in the year incurred. But starting in 2022, research and development costs are 5 years for domestic and 15 years for foreign costs. I think this might need to become a class because I just want to spin back to, well, what's research and development? So first of all, we call a lot of things research. All my artists call things research. It's really not, but they call it research. Well, based on these changes, I certainly wouldn't want to call something research and risk an examiner saying you can't deduct that in the current year. Conversely, for our clients who are building websites and doing other things, we go back and forth. Should things be capitalized or can they be deducted? Well, now some of this stuff might not be currently deductible. So I'm going to come back with you on more information on this next week. It may have to become a 1-hour class, even just the basics of what definitions, what do we need to stick into research and development here. Now, we have been looking at the Build Back Better legislation. Unlike a lot of us read it, oh yeah, my client will be able to do this, my client will do that. We're reading it because, man, if I have to make this a class in February, I'm going to kill myself. So we're kind of reading it and kind of knowing what might be in there subject to it being changed. So Build Back Better rolled the date back that this wasn't going to happen. I rolled it forward. I mean, it was going to be like 2025 before this became effective. So does that mean if they pass Build Back Better that we're going to get retroactive changes again? I don't know. In this case, it would be a positive thing, but again, it could be something like the 15-year property where they changed the definition and amending returns wasn't an option, right? You had to go back and correct them. So let's hope that doesn't happen. So state and local income tax, the big thing we've been talking about in classes is the pass-through entity tax. 18 states have a pass-through entity tax. I think ultimately every state is going to pass one, principally because the federal government has blessed their existence. It is a no cost to the state government way to help help business owners anyway, get a deduction for their state and local tax, a full deduction, as opposed to even having to itemize. So I think we're going to see everyone go that route. But in the meantime, the argument over the $10,000 SALT limit goes on. So there's a new lawsuit, not too new, but for purposes of this discussion, it's new. New York, Connecticut, Maryland, New Jersey, 4 northeastern states, high taxes, blue states, hurt us the most. They challenged the $10,000 cap on constitutional grounds. It violates Article 1, Section 8 of the 10th and 16th Amendments to the U.S. Constitution. In October of 2021, the U.S. Court of Appeals, Second Circuit, which is where we are here in New York, affirmed the federal district court case that the $10,000 cap is perfectly legal and you guys don't win. So, of course, what do we do when we don't win? We appeal. So they have petitioned the Supreme Court for the Supreme Court to step in, and that petition was filed on January 3rd. So if the Supreme Court does not act yet or agrees to hear the case, the question becomes this April, are we bound to file protective claims for all of our 2018 returns, which will go out of statute on April 15th? So put that on your calendar as yet one more, on your to-do list as one more thing we might need to do. If on April 15th we don't have certainty here, we may need to file protective claims so that we can protect our client's ability to go back and amend in the event that this lawsuit is successful. So if you don't know about protective claims, those of you that are members, there's a class Kathy did. We did 2 different versions of it over 2 years. That's on demand. You can go watch it. For everybody else, the class is available for sale, but we may do one specific to SALT come late March or early April if it looks like we need to. That is on my radar. It's not on Kathy's yet, so don't tell her. But all right. It's no fun because they feel better if I tell them that I didn't plan, I'm in a rush, please help me, and then they'll put a class together. Another interesting case that's going to appear in ethics this coming year is Charles and Tony Crispino versus the U.S. It's a district court case in New Jersey, and it didn't go well for the tax professional, Vincent Minnelli. I only bring it up because his name is in all the documents. Vincent mailed a claim for refund on April 15th, 2015. Now, right there, why is he mailing a claim for a client? You shouldn't do that. If they're out of the country, maybe. Otherwise, you shouldn't do that. They had a 2009 tax, which they paid in 2013. Then they needed to amend. They had 2 years to amend. Oh, I didn't put down the amount. Does anyone know how much the amount was? It was $135,000, this refund, plus interest. So Tony said he mailed it with a stamps.com stamp, not certified, not anything. He mailed it. Mailbox rule covers him, right? No. His testimony wasn't found credible at exam, at audit, or at trial. And these folks lost out. So I do hope that this preparer has E&O insurance and that it's paid up because he's got a claim. And this is yet another example of why you need $1 million worth of liability coverage. I don't know why he mailed it in or why it wasn't sent certified. I say, by the way, you always want to send these things in certified mail, electronic return receipt requested. Skip the little green card. The little green card is meaningless, right? What matters is that green ticket that you put it into the mail. And most of the time, if you or I send in a certified mail item, they won't give me the mail until I sign that card and hand it back to them. Government agencies aren't subject to that rule. They just get, they drop off all the mail. And at some point, if you're lucky, someone in the mailroom stamps it received and mails it back to you. So instead, use electronic return receipt. You can get 7 years of tracking. You save the cost of the postcard. It's a lot better deal for you. Say you're getting back the cost of all these classes just by knowing that. If you send 100 items a year, that's $280 you're saving right there. Deferred Social Security tax payments for your clients were due January 3rd. So if people are coming in with notices and collection notices, this would be an opportunity to get a couple of bucks maybe and help them out. The other thought is anybody, if you don't already have them marked in your software, anybody else that comes in with this notice, probably you should calendar it for next December so that you send all these people out a reminder that, hey, they got to pay this bill. It's coming. Okay, anyone have any questions for me? Before we call this a day, that's 38 minutes. That's not bad. Wow, no questions or comments. So I'm going to give it another 30 seconds, and then we're going to call it a Friday, call it a weekend. Well, that's awesome. I hope you all had an enjoyable 40 minutes here, and everyone have a great weekend. Hopefully we will see you next Friday.